Welcome to the WEInvested podcast, where we teach you how to save and make more cash.
And today on the WEInvested podcast, we have here with us Peter Harrigan, and he is the CEO and co-founder of Swan Digital. Peter, how are you doing today?
I'm doing well. How about yourself?
I'm doing great, sir. Thank you for joining us. And we'll just get right into it if that's okay with you.
That sounds great.
Yes, sir. So as the CEO and co-founder of Swan Digital, would you mind telling us what exactly you guys do over there?
Sure. Essentially, what we're trying to do is transform a 100-year-old but very large, like a $12 trillion industry, which is the derivatives industry. And we're trying to make it easy to use the way that Apple made computing easy, and the way that Robinhood has certainly made stock trading a lot easier recently. So our goal is to get it to a point where if you can move a mouse, you can create a new derivative product that fits your exact needs.
That's awesome. Yes, sir. So for people who may not understand, because I know for myself included, derivatives are a little confusing. It can be confusing. So would you mind giving
Sure.
us a little bit more in-depth explanation of what exactly a derivative is?
Yeah, sure. And as far as it being confusing, I remember one of my first jobs in trading, they said, why do we use all this jargon? And I thought, oh, because it simplifies it. And they said, no, it's job security. They try to make it confusing so people can keep those jobs. Yeah, essentially a derivative is just a financial product, the price of which is determined or derived from the price of something else. So if you think of the simplest thing to think of is like a stock option, you have a $50 stock, and then you might buy the right to buy that stock. And so that right expires at a certain point, and it will go up and down in price more than the price of the underlying stock. So it's just something that's derived from the price of something else. They can be used for speculation. They can also be used to hedge risk, right? So if you imagine I don't know, you had an oil field and you're drilling, bringing up a certain amount of oil every day, you could sell oil derivatives, oil futures, which therefore lock in the future price of the oil that you're going to be pulling out of the ground, so that you're not as exposed to the price risk.
For sure. Okay, so I think that's a pretty straightforward explanation. And so I heard you mention earlier something about Robinhood, and I think that's something that's extremely relevant today. And Robinhood has kind of made options trading more available to the people and kind of more popular, I guess. It's brought it to light. So what are your thoughts on Robinhood and that option trading method?
Well, I think it's it's interesting. They've certainly made it easier. And I was just on the site, today looking at it. And that is kind of where we're trying to go in terms of simplicity. You actually just sort of say, oh, I want to buy, Tesla, and you don't even have to say how many shares, right? You can say, I want to buy $1,000 worth, and they do all that behind the scenes for you. It's similar to the approach that Coinbase took in cryptocurrencies a few years back, where you went to a site, you didn't have to say, well, am I doing a limit order? Am I doing a market order, a stop order, or something like that? You said, oh, I want to buy some, right? And they made it very, very easy to do. When I first looked at the Coinbase application, I thought, this is dumb. It's so simple. It's kind of stupid. And I've heard they're looking at IPOing at some value like close to $10 billion. So that shows how much you should. I don't know why people are listening to me when I thought that, but they took that overly simple app to an incredibly high valuation. And obviously Robinhood's been incredibly successful in doing that. A lot of people, you're too young to remember this, but computers used to be awfully complicated and hard to use. And you think about when Apple started putting out like a graphical interface using a mouse, went from something like 50,000 computers worldwide to, in the billions in a relatively historically short period of time. So, when you make this stuff easier for people to use, people flock to it.
Yes, sir. Most definitely. And that's another thing that I wanted to kind of give credit to Swan Digital, is because on a previous interview that you did, I heard you kind of referring to derivatives as price sharing, if I'm not mistaken.
Yes.
And so I just think that was a really great way to make the word derivative sound less intimidating and kind of easier to grasp and easier to understand.
Good. I'm glad that made sense to you. And
For
I
sure.
always kind of wonder when we come up with these terms if it actually helps, but that's good to hear.
Yes, sir. It definitely made sense. So if you could just like let the people know a little bit more about your background in finance and exactly how you got started in it.
Sure. So I was primarily in capital markets, so in trading for years. I actually got into trading. I kind of got the trading bug when I was young, and when I was in college. And a couple friends and I actually came up with an arbitrage idea, looking at two different stock index futures, and we started trading that pretty quickly out of college. This was like the '80s, and things were so inefficient. We literally like called a broker in Denver on a phone who then like typed the order, and it went to a guy on a telex on the floor, handed to a runner who take that out to a guy standing in a pit. And you could actually make money in arbitrage, even though it was that slow, because the markets were just slower and pretty inefficient. So from there, I went on. I ended up trading for a little while at Bank of America, and then ended up on the trading floor in Chicago, where I traded currency options, specifically Swiss franc options. And then I came out to San Francisco and did stock options for a while. I like to say that I did that for slightly longer than it was a good business. It was a great business to be in. And then between the changes in technology and the bear market and some of the competitive forces, it stopped being a good market. And I think it stopped being a good place to be sometime in 2001, and I gave up sometime in 2002. And then after that, got involved in my first startup in the mid 2000s, which was a company called Sentient Technologies. And that was an AI company where we were essentially using an evolutionary technology to develop new trading strategies. So I went in and helped them found that company, and was there for about 6 years. We went from zero to a reasonable value and about 50 employees. Started making some shifts in where that company went, and so we didn't really need me anymore, because I'm not one of the robotics guys, and all I knew about was trading, and I didn't know the AI side of it, except for a few things I helped them with, the kind of objective function and that it was training towards. And so I left in about 2013 and got involved in the blockchain area in around 2014, started learning about that.
Wow, that's a pretty extensive background. But I think it's really interesting some of the things that you've gone through in different phases of the financial world that you've seen. I know, like personally, I've always wondered, like back in the '80s, how did people know the price for stocks, like who work on the floor trading, or you know what I'm saying? Because they don't have access to the internet. So how do you know accurate prices for stocks? So
Well,
I think
it's
that's pretty
interesting
cool if you.
when I was trading Swiss franc options, the Swiss franc futures pit was right next to ours. So you had guys standing there literally like flashing the symbol to you, and then you had giant screens on the trading floor. But I mean, if you weren't on the floor, you had such a huge disadvantage. You had a time disadvantage, and you just an informational disadvantage, right? I mean, nowadays it's so much more democratic. People pick up their phones and they have the information that we used to pay a lot of money to be on the floor to get right away. Now, it's freely available to a huge number of people, which is kind of amazing. I mean, it was fun to be on the floor. It was fun, the advantage that we had, because you could make money from it. But, technology shifts that, right? And we knew it was going to go away, and we knew it was going to change, and it has. And I think that's, hurt a few people who used to be market makers down there, but it's helped a lot of people. And that's obviously a good trade-off.
For sure, for sure. So can you talk to me a little bit more about, how you got your start in cryptocurrency and learning about blockchain and just how revolutionary that technology is?
Sure. Well, I started kind of experimenting and trying to learn about it. And I guess late 2013, early 2014, I had left Sentient. I was not old enough to really retire, and but in a position where I actually could take some time and figure out what I wanted to do next. So I thought this would be a really interesting area to learn about. And I started going to the Ethereum meetups that were in San Francisco and then down in Silicon Valley, and went in and started learning a little bit about, the technology, also what some of the uses could be of the tech. I like to say I got a couple of things out of that. One was that I kind of invested early in the Ethereum ICO, I guess we call it now. It wasn't even called that then, which was just incredibly lucky. That worked out well, and that sort of helped us and what we're building. The other thing I did is I ran into my partner, Steven, who was the other old guy in the room. I mean, we were, there at like around, 50 years of age and in a room full of 25-year-olds. And so naturally we sort of started talking, and he had an aerospace engineering background and I had the financial background. And we sort of started talking about what you could do with some of this technology and what kind of businesses could be built. And then before long, we were sort of went into discussions that ended up being the company we're doing now.
For sure. So in Swan Digital, do you guys utilize the blockchain technology in your current company now?
Well, so we are definitely using blockchain as part of the technology stack. So a lot of our technology is more conventional, but one of the things that's been really interesting about blockchain and smart contracts, it got a lot of people really thinking about financial products and how they could be done. So for us, we started initially thinking we would put everything into smart contracts, and then realized that we really didn't have to put everything in that particular technology. But we certainly find it useful in terms of being able to create like a form of collateral storage that people can look at that's decentralized. So there's some very, very interesting things we can do in the derivative space because of blockchain. But more than anything, it allowed us to start rethinking kind of how do you create a derivative? How do you create a financial product? Are there new ways of doing it? Which ended up getting us to where we are now, which is something, again, where it's this sort of visual and intuitive tool that allows people to select the outcome they're looking for. And then we break it down into the pieces that build that, rather than the old way, which is kind of, here's a financial object, what can it do? Right. So it's sort of taking it the other direction. And I don't think we ever would have gotten there without, going to those early meetings and sort of thinking, getting that inspiration that came from that space.
For sure. So because like Swan focuses on the visual tools and the visual aspects and making it more intuitive, what is your target market?
So we've been trying to build this so it can work in a lot of different directions. And, we want to make something that can hit a lot of unserved markets that exist right now. There's some things in like the industrial metals and industrial chemicals that are not being as fully served as they can be. Certainly, if you look at like the developing world, the agricultural markets are not really well developed. There's an interesting something that happened a few years ago in Southeast Asia. Like they were growing a lot of pepper in Vietnam. So in Cambodia, they thought, well, they can grow it in Vietnam, we can grow it in Cambodia. So you have like this huge market. People start growing this, but they didn't have a hedging vehicle. And so what happened is all the supply came online, the price started to decline, and people were in trouble. Well, we'd like to be able to help build a market there really quickly, creating something where it's very easy to start a new market. So I think our initial markets are probably going to be more conventional, working with some partners around maybe industrial metals and things like that. But I think in the long run, we'd like to go out and try to serve all these areas that are currently unserved. There's just large parts of the world that don't have this kind of financial infrastructure. And so I think we can help them develop that more at a lower cost.
For sure. Yes, sir. So, your background, you have a lot of experience starting new companies and, just creating things from ground up. So what kind of feels different to you about Swan? Like, how did you know you had the right business idea when it came to this one?
That's a good question. I think one of the things part of the difference is I've been involved in building a few companies now. And so there's certain early mistakes that you make. I mean, I certainly think about like when I was, 23 and my friends and I were starting our trading, we didn't have any kind of backup plan. We just had like one strategy, and it worked for a while, and then it kind of stopped working. And you know, there's a lot to be said for making mistakes when you're young, because then you have a whole lifetime to learn from those mistakes and benefit from what you learned. And one of the things we learned there was not to be too focused on just one thing. So we built a lot of optionality into what we're building. There's some technological optionality in terms of different ways we can go. And then also the fact that we built it not just for saying, this is the one market we're going to serve, but we built it in such a way that we can address a lot of different markets. So that really helps us. If one of the areas that we were thinking about going into has some problems, we don't have, we're trying to eliminate those areas of risk that are outside your control, right? So that's, I think that's one of the bigger ones. That, and I just, we're a little bit more organized about how we're doing this, and, better documentation and better plans, that kind of thing.
For sure. So it's kind of like you're learning how to hedge against, the risk of being a one-dimensional company.
Right. Absolutely. I mean, I certainly, when we first started, we thought, Bitcoin's going to need people to have a way for people to hedge themselves. And now certainly there are some products out there now, but if we had just done that, at one point we would look like Bitcoin, was going to look like it was going to go away. Right. And then of course it's come back. But I think that when you are, when you're tied to just that one option, it definitely gives you puts you at more risk.
Sure. Yes, sir. So it seems like, you really understood the importance of like networking and getting in these groups, going to different meetups to learn about new technologies and things like that. So what's the importance of having a good team around you and like building a good team around your business to you?
Right. Well, I mean, you're never going to come up with, okay, I shouldn't say that. I'm certainly never going to come up with a brilliant idea entirely on my own. I think you need to have, more brains in there. You have to have you think about that like Venn diagram and how it gets wider as you add people who bring different experiences. Certainly when I was at Sentient Technologies, I came in with someone with a lot of trading experience. We had, like robotics PhDs. We had a guy who had worked at NASA. We had all these really, really brilliant tech guys. And what was really interesting was bringing the really smart tech people who didn't know a lot about trading with, me, who knew about trading and didn't understand what they were doing. But this allowed us to really come up with this kind of cross-domain knowledge. And so I think when you're sharing ideas and you're bringing in a good team, you just get further, right? You're not gonna think of everything. And then when you have these long conversations with people about what you can build, you start coming up with some really brilliant ideas that you would never have gotten to just as one person. I mean, this is the story of humanity, right? This is why we outcompeted other animals, is we can communicate and we can work together. I even saw something that said that's why they think like Neanderthals died out. Humans are better at networking. We actually communicate really well within our groups, and as a result, you get a lot further.
Yes, sir. 100%. So, and I know you kind of hit on this topic earlier about some mistakes that you saw that you made early on in your career starting out. What do you see like many startups and young entrepreneurs, like what red flags do you see today, if any?
Yeah, it's an interesting question. I haven't, it's funny because we worked with a lot of other companies, and then we've been like kind of heads down in our own, in the last couple of years. But I think people don't necessarily build in enough optionality. I think the other thing is just you be careful with your costs, right? I mean, if you can keep your costs down, you're not giving away too much of your equity, you can have, more shots, right? If you get too diluted too early, you can be in a situation where, if you're not going to have the right value at the next raise, you're in trouble, right? So I think keeping costs down, doing a little bit more planning and working stuff through before you get to the execution phase can be worth it. I know there's a big philosophy now about starting fail fast, have new ideas, and have them work. And if they don't work, then you move on. But I think sometimes it actually pays off to spend a little more time in the planning phase, because once you get to that, you get the investment dollars in, clock's ticking, and you have a
Right.
limited amount of time.
And that's a pretty interesting point too that you that I kind of read on your bio. I was on Wikipedia and I saw that the tech company that you were with previously was like rated as the most well-funded company in 2016 or something like that.
Yeah,
And so I'm not too familiar. I'm
yeah.
not
Go
too
ahead.
familiar with like venture capitalists or raising money, doing different rounds to raise money or getting investor money in. So like, what's that process like, and what does that really mean?
Well, it was interesting for us. So yeah, Sentient, after I left, did a huge round. And so we had definitely increased the value from, nothing to a pretty significant number, but then they went and got to the next round. The founder, Antoine Blondeau, was very good at that. Very, very intelligent man, and very good at talking to investors, among other skills that he had, as well as having a really, really deep understanding of the AI field. But what was interesting about the venture, about raising money, we talked to a ton of VCs, and the money just doesn't come from where you think, right? So you go out and we talked to VCs over and over again, and we were getting nowhere. I mean, people thought the ideas were interesting, but we weren't really getting checks. We get a few, just enough to keep going. And then we ran into a fabulous investor, someone out of Hong Kong, who was extremely supportive of what we did. And all of a sudden, we were in a completely different financial area, right? We were able to expand, and we had a lot more money. And what we found, though, is, you kind of think, well, if I talk to 10 people, I'll raise $100,000. If I talk to 100 people, I'll raise $1 million. There's some kind of like linear relationship. And it really wasn't like that at all. We talked to people and got nowhere. And then all of a sudden, we found someone who was incredibly helpful to us. And then after I left later, they, continued that relationship, and were able to help that financial relationship and that investment relationship get them into bigger financial relationships as well.
Sure. And I hear you kind of, well, I guess at the beginning of the interview, you were talking about, I guess, Asia and some Asian territories growing more pepper. But
Yeah.
I've just heard that a lot of China is buying up property and buying things in Africa, and a lot of the economy is looking towards Africa as a very resourceful place. So is that something that Swan Digital is thinking about doing too? Maybe building an infrastructure up in Africa out, or getting in Africa to get in early on that?
Well, one of the things that we've looked at with our infrastructure is, if you look at like these developing countries, particularly in Africa, where they've jumped ahead, like they don't, we used to have all our phone system was a bunch of wires running through the ground, right? They've just leapfrogged it. Everything's cell phones there. People have, and they also have a really good understanding of kind of, you know, digital currencies and things like that, right? Because one of the first ones was one based on minutes and things like that. So that's a very interesting area. Obviously, huge potential for growth. We have talked to some people about certain crops that could use the ability to hedge against price movement. So I think when we're further developed, we'll be in a situation where it could be adapted to those markets fairly inexpensively. We want to have something where, they don't have to build like a giant exchange, right? They just have something where if we have the right price feed and agreed common price, we can help them to build and develop a derivative around there. So it is something that we're talking to people. We talked to some people in the southern region of Africa about certain crops, and I think could be very helpful to people there. But we're not ready to do that yet, and so we won't be hitting those markets until we've developed a little bit further. At the same time, though, it is huge area, right? The growth rates are crazy. People just don't recognize how big, just how big the continent is in terms of people physically. I mean, there's so much happening. I do think there's real prospects for that becoming a giant growth area.
Yes, sir, for sure. So, what do you think has been like the most critical moment of your business journey? So, like, kind of like a fight or flight moment for you.
Well, I mean, I did, having traded on the floor, you made a lot of decisions and a lot of trades. So there were a lot of, like there's some big wins and some scary losses. Um, I'm trying to think if I can isolate on just one. There was one I talked about on another podcast where I was like trading Adobe options, and like I was short some puts, and they were way out of the money, and they were not long to expiration. I thought, oh, I don't need to worry about those. And one day the price started dropping, and it was early 2000. We were just coming out of the internet bubble, and there was this giant drop in the Nasdaq market, and it started going down. And I think, why do my sheets keep telling me I'm getting like long stock? And it's like, oh, because you're short puts, dummy. And it started to go against you. And I remember having to run over to like the Bloomberg machine and just start selling stock desperately as it went from like 95 to 90 and then to 88 and then to 85. And I had to start thinking, what'll my position be $1 lower? I better sell that now. So I'd sell and sell. And the thing is, if you're short options, you have this position where as the price goes down, you get more long the stock. And as it goes up, you get more short the stock. So it's the exact wrong position to have in that kind of situation. So I do remember like selling all the stock, and it went down to like 78 or something. And then all of a sudden the price stopped, turned around and started rallying. I'm like, oh my God. And I started buying them back. And, and I think at the end of the day, I had sold like 50,000 shares for an average price of like $84.02. And then I'd bought back 50,000 shares for like $84.05. I've lost like 3 cents on 50,000, and it could have been so much worse. But it did teach me to, look at that position, not take it for granted that, oh, there's only 4 days left on this, you're okay. There's some risks out there that can really bite you. And I mean, I came out of that day okay, but if I'd had the opposite position, I would have made a ton of money. It would have been great.
Right.
Yeah.
Right. Yes, sir. I mean, it seems like a high adrenaline moment, right?
Oh yeah, absolutely. I was drenched with sweat, and I looked up at the clock, and it was like 9:30 in the morning. I still had like 3 hours a day to get through. Yeah.
Right.
Fortunately, I was younger. I could do it back then.
For sure, you can handle that stress.
Yeah.
Okay, so what would you say is the single most important reason for your success today?
Such as it is, I think it's important. I think people underestimate taking risks. Taking risks and trying to build a new company, trying a new career. I think people just if you can take risks where that your downside is limited, but your upside is unlimited, or at least less limited, whether that's starting a company, starting a new job, buying a property, investing in something. I think that there's a lot that can happen. I mean, when I think about what's happened, what's happened with me, I got involved in helping start a company. That was a risk of, maybe I was wasting my time, right? But it actually ended up being a great payoff. And then you certainly think about, cryptocurrencies and some of the stuff around blockchain. When you were buying these things early, yeah, they could go to zero, but they could go up quite a deal. And I still think that's true for a lot of things now. I mean, Bitcoin can go to zero, but it can go to 1 million, right? So does it make sense to not have any? So I think, the biggest thing I think that has worked for me is, risks that are not going to put you out of business. They're not going to, personally bankrupt you, but risks that you can afford to take where you have a lot of potential upside. And I can say that if I look at my own life, there's been a lot of, kind of steady or, a little bit of down, but then a couple of big spikes up. And it's certainly better than what a lot of people do, which is ignore the risk. Be taking huge risk for small gains, but they don't look at the risk they're taking. And so I think that, a lot of people think, well, I just want a nice, smooth, steady income, but then they've got risk they're not recognizing. And then sometimes they're in a really bad situation. But if you can have that risk be limited to what you can deal with, and then have enough upside, every now and then the upside comes in.
Yes, sir. I agree. So how do you personally define success as an entrepreneur?
Well, I mean, you got to kind of keep getting up every day and doing the work to get to the next step. I think a lot of it is just sort of still being there, right? Because if you if you give in, if you give up, then it's done, right? But if you take risks where it has to be done, then it's over. But if you can keep swinging, then you keep having these chances for good payoffs, for building interesting things that can potentially help people and help yourself.
Yes, sir, for sure. And how would you like for people to remember you and your companies?
Well, it's interesting. I have not been asked that question yet. What we're really trying to do is bring the best parts of the derivatives market, but hopefully not the worst parts to people in a lot of businesses in a lot of areas. So I think by trying to create something that is visual and intuitive, where people will know what they're doing, they'll actually deep down understand what they're doing. Part of our user interface is actually a drag and drop technology where people like click on the mouse and pull the line to where they want it so they can see the payout they want. And I think that that connection between your eyes seeing it and your hand moving it really gets it locked into your brain in a way where you really understand what you're doing. So what I'd like to, I guess we'd like to be remembered by is helping smaller businesses and people get to new investments and new kinds of price protections in a way that they couldn't have done before we came along. So we'd like to help a lot of people who aren't in those markets be able to get to those markets in a positive way to either protect themselves and their businesses or find new investment opportunities that could be positive for them.
Yes, sir. That's awesome. That's awesome. But and before we wrap up this podcast, I always play a fun rapid fire question game at the end where I just ask you 3 random questions.
Okay.
Are you up for it?
Oh, sure. Let's go. Yeah.
Yes, sir. So first question, where's your favorite place to travel?
I love going to the mountains. So love getting to Colorado and especially like in the summer and when it's beautiful up there and hiking up at high elevation and stuff. So that's probably my favorite at the moment. Yeah.
Yes, sir. Question number 2, what song explains or represents your life the most right now?
What song?
What song?
Damn. You know what? I don't think I know at this moment. If I had my daughter here, she could she's the one who keeps me abreast of all the modern songs. I'd be like lost in like classic
It can be
rock
from
if
the
it weren't
80s.
for her.
Yeah, it can be from the 80s. That's cool.
I honestly, I think I almost have to take a pass. I can't think of a song that sums up my that sums up anything in my life at this point. But sorry to disappoint. I'll work on that one. How about that? I'll get back to you.
No problem. And look, last question. What's an amazing thing that you did that no one was around to see?
Amazing thing that I did that no one was around to see. I mean, I could make up anything, right? Because no one was around to see it, right?
That's true.
Well, I mean, it would have to have been something that I did when I'm trying to think of yeah, okay. So I can remember when my first daughter was born, and they were my wife, they took into another room, and I just had this little tiny baby with me, and I remember just sitting and talking to her and sort of explaining to her how we were going to be friends and what this was going to be like, and talking about how what our future would be like. And I mean, yes, someone was there, but she was about an hour old, so I don't think she remembers it. So that would probably be it
for sure. For sure, that's a moment you can never forget, right?
Not yet. I haven't forgotten it yet. Yeah.
Yes, sir. Well, Peter, thank you so much for stopping by and chatting with us. Would you mind letting the people know how they can find you on social media or the internet or anywhere else that you can be found?
Absolutely. So on Twitter would be at Gray Swan Digital. That's spelled with an E, so it's GREY, Swan Digital, or they can just look up me, Harrigan _Pete on Twitter. We have a Medium page, which is medium/Gray Swan Digital. And if they want to contact us, they can just send an email to newfinance@grayswanmail.com, and we'd be happy to answer any questions anyone has.
That's awesome. Thank you so much for your time today, Peter.
Well, thank you. This was fun. Thanks.
Yes, sir. All right.